morning traders, Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq 100 index. In the last update we were highlighting this risk zone here. This resistance zone comes from the old top end of the cloud here, old resistance zone there, as well as these levels that were support back then in January of last year now became a resistance zone. So you can see how the market ran into trouble when it got to these old cloud chart resistance levels, consolidating now. Now the downside risk target is the front end of the cloud here, this 14.550, 14.548 zone. That support zone coincides well with this old cloud chart support zone that failed and now was briefly a resistance zone. So now we do expect the Nasdaq to test this area. Now on the daily Ichimoku of the Nasdaq 100, the price action is now below the cloud, so that says the outlook's changed to bearish from bullish. Price action above the cloud is bullish, price action below the cloud is bearish. And then there's two downside targets to keep an eye on here. Downside support targets is this level here, that 14.7328, 14.730 roughly, and then this one off the weekly 14.5 is also a level to watch out for, and that coincides well with that low there. So those are the downside risk targets in this current correction. Now the market's current correction is still following seasonal patterns. We'll still look at that in a minute, but these are the downside targets. And then in a very weak market we could test this 14,000 level there. If support comes in at this level, there's a swing trade back up to the bottom end of the cloud here, or the top end of the cloud here. These are the upside resistance targets for the current rally. If we get a support swing trade rebound from these levels to the upside. If support fails here, then the next downside level to keep an eye on is this bottom end of the cloud. Yeah, that would be another downside risk target to look at, 14.35 as mentioned before. So these are the downside risk targets on the daily. On the 4-hour Ichimoku, also downside risk now. We're dipping below the bottom in the cloud here. So key level to watch out for is this front end level, 1582. The bottom end of the cloud is the next support zone, 14.920, 14.8, and then this cluster of support. These lows here, and that's pinched between the daily weekly support zone. So these are the downside risk targets on the weekly. If support does not come back in at these two levels at the bottom end of the cloud here, then it activates these two downside resistance targets. But bearish outlook on the daily, on the 4-hour. Bearish outlook on the daily now, because the outlook has just changed. So the market needs to get back above the top end of the cloud here. And these are the downside risk targets to keep an eye out on. Just a point to note, if we look at the Nasdaq composite, Nasdaq 100 equal weighted index versus the Nasdaq 100 index, you can see that the large cap tech's really been driving the rally and the performance of the last couple of months. The equal weight is only up 18%, whereas the large cap's up 37%. So you can see the disparity between the returns. So large cap tech has been really driving the rally of the last couple of months, and that's also a major risk factor. If there's some profit taking in these shares, large cap tech, Nvidia, Tesla, Microsoft, Apple, etc., then we should see more weakness in the market based on that. So just keeping one eye on seasonality. We've got the average annual seasonality chart here at the bottom going back to the 80s. And you can see generally a nice little strong rally in January, February, but down. Then that March rally starts and builds. Seasonally, you get that little correction there in June, another one in July, and then August into September, and then you get the traditional strong correction in September down to an October low, and then a nice little rally into the year end. So I think we're probably going to retest these lows here, and then these are the total returns of the index, but still pull back a little bit and then make another attempt at the old high in the Nasdaq. So keep an eye on seasonality, because that can indicate that we still can see some more weakness in the market on a seasonal basis back down to these levels here, and then a rally into the year end to retest these old resistance levels. So kind of a range bound market now between these support zones and the old highs here, and do expect some form of a recovery in a seasonal pattern, October, November and December into the year end, if we have a healthy seasonal correction in September. So far, keep an eye on these downside risk support levels, potential rebound back up to the bottom in the cloud chart resistance zone. So these are kind of the support zones to keep an eye out on for potential swing trades. Now, do remember we are trading counter trend here because price action below the cloud is ultimately bearish. So any kind of swing trade to the upside here is a counter trend, and so far there's a few short selling opportunities in the Nasdaq 100. Until next time, happy cloud chart trading. Bye for now.